when the entire world was ecstatic from the news that Neil Armstrong was the first man to step on the moon. India was planning something big for its citizens. I am your daddy, and in today's video of Finance Daddy, we will look into what happened in 1969 that completely changed India's financial system. On July 19, 1969, as the world awaited the first humans to walk on the moon, India was busy embarking on its historical event, the nationalization of 14 commercial banks throughout the country. In an unprecedented move, the government of India took over private-owned banks that accounted for over 85% of the country's deposits. But 50 years later, the government may be about to reverse that judgment. Yes, there are rumors that the government may soon privatize all public sector banks, and we need to discuss this. But this will not happen overnight. One could argue that it will never happen at all. However, the government has already stated that they have no business conducting a business. So there is an argument that a privatization drive is on the horizon. But before we get into this, let's take a step back and look at why banks were nationalized in the first place. Between 1947 and 1969, a total of 665 private banks went bankrupt. Yes, my friends, you have heard it right. 665 banks went bankrupt. As a result, people began to lose trust in the country's banking sector, and private banks weren't exactly helping the banking cause either. They were not issuing enough loans to farmers, were not granting credit lines to small businesses, and were ignoring a vast portion of rural unbanked India. As a result, the government stepped in to fill the void. However, things have changed dramatically, particularly since the 1991 liberalization reforms. While PSBs languished, the private sector came through big time. As a result, their market share has decreased to 60%. Worryingly, problematic loans increased, with some of the most extensive defaults upsetting the industry. For example, the jeweler Mehul Choksi fled the country after defaulting on a 13,500 crore loan. Then there was diamond tycoon Nirav Modi, who got away with fake credit of 14,000 crores. And liquor baron Vijay Mallya, accused of defaulting on loans worth 9,000 crores. And what is the common thread that connects these disparate incidents? Banks in the public sector. In the majority of these cases, they were the largest lenders. However, as a result of bad decision-making, the government has had to inject 3.10 lakh crores in the last 5 years to keep these banks afloat. It was a hole in the ground, one that drained billions of dollars from taxpayers. So it's easy to see why the government wants to privatize these massive institutions and get its hands off them. But what's the only flaw in this argument? Bad loans and poor corporate governance aren't simply a PSB issue. Do you remember Yes Bank? That was a remarkable capitulation by a private sector bank. And if Yes Bank appears to be a little blip, do you recall ICICI Bank? A few years ago, the former CEO was accused of loaning about 2,000 crores to a corporate organization having business ties to her spouse. And, lest we forget, some private NBFCs have failed due to a lack of caution. So privatization alone will not solve the banking crisis. And there's something else we haven't even mentioned. PSBs have a clear social agenda. The first is financial inclusion. PSBs account for roughly 85% of all rural branches in the country. When it comes to ATM deployments in these locations, it has a similar proportion. They reach folks in India's most distant places. The private sector would never invest here since it would be a complete loss. Then there's its function in social welfare programs like the Prime Minister's Jan Dhan Yojana. Overall, the plan aided in the opening of nearly 44 crore bank accounts. However, private sector banks contributed only 3% of this total. Don't forget that these bank accounts are also crucial in allowing consumers to get government subsidies. Finally, there's the issue of employment. PSBs have also been a significant source of jobs over the years, with lakhs of Indian youth fighting for a coveted bank job. However, the last wave of PSB consolidation has effectively closed roughly 3,000 branches. In addition, the number of employees has decreased from 8.5 lakhs in 2017 to 7.7 lakhs in 2021. There is also a lack of trust in private institutions. People still prefer to invest their hard-earned money in a government-backed bank. So, while the government may claim that the government has no business being in business, things aren't always that simple. Which begs the question, what is the solution to the great debate over bank privatization? It's difficult to say for sure. Perhaps we could experiment a little and let the data decide. According to former RBI Governor Raghuram Rajan, look, what the economy needs now. There is a rationale for experimenting with privatizing one or two mid-sized public sector banks and lowering the government share in a few others to less than 50% while working on governance changes. For the rest, instead of a never-ending theoretical discussion, we will then have some proof to go on. So, what will be the fate of Indian banks in future? You can comment below your answer. I hope you liked the video. If you do, please don't forget to like, share, and subscribe so that I get the motivation to bring more videos like these that are not discussed in our everyday lives. Have a financial full day ahead.